And in financial news, Sunday marked the 5th anniversary of the collapse of the Lehman Brothers investment bank. In 2008, the firm filed for Chapter 11 bankruptcy protection following the massive exodus of its clients, drastic losses in its stocks, and a major downgrading of its assets by credit rating agencies. It marked the largest bankruptcy filing in U.S. history, and its demise became the catalyst of a major global financial meltdown in which the government shelled out $700 billion to go to bail out the big banks. At the same time, today marks 5 years since the Federal Reserve authorized a bailout loan of up to $85 billion to the insurance company AIG. President Obama observed the anniversary by speaking to the American people. While he sought to make the case that we're experiencing an economic turnaround, even he had to acknowledge that there's currently a huge economic inequality gap.
Because even though our businesses are creating new jobs and have broken record profits, the top 1% of Americans took home 20% of the nation's income last year, while the average worker isn't seeing a raise at all.
Well, here to talk about some of the lessons learned and why that gap persists is Leopold, Executive Director of the Labor Institute in New York and author of the book, How to Make $1 Million an Hour, Why Hedge Funds Get Away with Siphoning Off America's Wealth. Les, thank you so much for joining me.
Thanks for having me.
Now, going back to about 5 years ago, talk about what Lehman Brothers was doing that made it fall so hard so quickly.
Well, Lehman Brothers, as well as virtually all the major banks, were super leveraged, and they were into risky investments based on high-risk mortgages that could not possibly sustain that they were alleged to sustain. So they were loaded up with what they thought or what they said were AAA rated securities that were actually junk. And once the emperor's new clothes turned out to be not there, they did in fact junk, and the entire system froze up and collapsed.
Well, Lehman Brothers was allowed to fail, but the government bailed out AIG the day after for billions of dollars. Why was that?
Well, they thought that if they didn't bail out AIG, then the next day it would be Goldman Sachs, and the next day it would be JP Chase. And they saw a string of dominoes falling because as they began to investigate, they realized these banks were loaded up, absolutely loaded with this junk. And people who owed them billions and billions of dollars were loaded up with junk. So if AIG didn't pay off its debts, then you would have a whole bunch of other going into bankruptcy, which from my point of view would not have been a disaster.
Right.
The disaster is that we absolutely changed nothing since then. And we are now in a new era where the top 1% is literally getting 95% of the recovery. President Obama greatly understated in his comments. The top 1% is getting 95% of the recovery. And that's precisely because of all done and not done since the collapse of Lehman Brothers.
Les, you know, if you look at Wall Street right now, it's clearly doing very, very well. So if we have a healthy Wall Street, then we should, by theory, have a healthy economy. Why haven't we seen it translate into more jobs, more housing opportunities, and less foreclosures yet?
Look, what does it mean for Wall Street to be making a lot of profit? If you dig into where's it coming from, are they creating new value for the American economy, or are they skimming it off? And I'd say the strong case can be made that they're skimming it off. Just in the paper, what was it yesterday? The ethanol market being manipulated by JP Chase. We have cases of HSBC. We have cases of working with payday loans. So where is this great profit coming from these Wall Street banks? What value do they produce for the economy? The answer is none. And that's the problem. So if you're not producing any value, how is it that you're going to lead towards prosperity for the American people? We're breaking apart into two now. The financial sector is literally leeching off the wealth into its own coffers and spreading it to the top fraction of the top 1%.
And Les, I
It's
wanted
going to take a while for the American people to realize it, but we're in a brave new world here.
Les, I wanted to move on to my next question, which is, a lot of the jobs we've seen come out of this recovery are minimum wage jobs, with little opportunity, of course, for upward mobility. Why is that the kind of recovery that we're seeing, and only that kind of recovery?
We've been in that kind of recovery for 30 years. The fastest growing jobs have been low-wage jobs for a long, long time. And that's this new economy that we're getting into. We're going to have craft jobs for the vast majority of people, and we're going to have financial sector jobs that are enormously well paid. And this is the first crash that I know of anywhere in the world where the rebuilding afterwards actually made the income distribution instead of better.
Well, Les, unfortunately, we're out of time, but we're going to have you back on because, of course, it's a topic with lots of news, and we need to definitely cover this again. Thank you so much. That was Les Leopold, Executive Director at the Labor Institute and author of How to Make $1 Million an Hour.